Hey, what's up? I'm Chapple, and today we're going to be talking about when to sell a stock or other type of investment. So it's kind of funny. I've seen some other people talk about stuff like this on YouTube about when to sell an investment, but I've noticed that a lot of them have kind of a very narrow idea of when to sell their type of investment. So for example, I see some real estate people talking about when to sell a real estate investment. That's decent advice. I see some of the gold standard investment gurus out there, the penny stock traders and the day traders / swing traders, talk about, when to sell a stock approximately this second or this minute or this hour. But for me, I've had a lot of experience in each one of these areas. So I'm going to give you some general advice and some specific advice about when to sell something like a stock investment, real estate investment, or really a lot of these rules apply to just any investment you make in either a business or, something that just grows over time. It could be commodity, whatever it is. These rules typically apply to pretty much anything, including like Star Wars collectibles and like trading cards and stuff. Trust me, I have like $10,000 worth of trading cards that I bought for like $900 when I was a kid, and I haven't sold those yet. And that brings me to my first tip on when to sell a stock or other type of investment. And that is, unless something else happens further down the list that we're going to get to, just try not to sell your investment. So why would I tell you try not to sell your investment when this video is actually when to sell your investment? Well, that is because when you decide to cash out from your investment, assuming that you've made some money on it, you are automatically preventing that investment from continuing to grow and compound over time. So for example, if you were to invest, $10,000 at the age of 20 years old, and you have, an average growth, 4, 6, 8% a year, and you were to reinvest most of that, if you were to cash out your investment, let's just say on that $10,000, let's say you doubled it up within 15 years, and all of a sudden you have $20,000 and you just cash out, you made a $10,000 profit over 10 years, that's $1,000 a year, 10% return, that's really good. What you're actually doing is you're preventing yourself from making potentially $100,000 over the next 20 years, and that is because of compound interest. I have tons of videos on that, so just type in Jack Chapple compound interest on my channel. You'll find so many really detailed examples about why that is so important. But pretty much when you cash out, assuming you're making money and want to profit, you are preventing you from getting to that next level of wealth or cash or investment portfolio, which would put you potentially set you up for life or put you in a whole different stratosphere of wealth. However, there are plenty of decent times to actually sell your stock or investment, and let's get to those on this list. So the number one thing is try your best not to, especially if you invest like I do, but there are a lot of scenarios where even if you invest exactly like I do, tons of scenarios where it is a good idea to sell your stock, and let's get to those right now. So the number 2 tip for when to sell your stock or other type of investment is when you need the money. And this is something that I don't see a lot of, those day trader people talk about. You have to sell at this exact second, you have to sell at this exact minute, you got to cash out, make that 8% return in one day, then you got to buy the next penny stock and then wait another 8 minutes, and then all of a sudden you've quadrupled your money in one day. It's just too good to be true. I love some of those guys. They're so funny. So yeah, number 2 anyways is when you need the money. And this is something, again, I don't hear a lot of normal investors talk about this, but a lot of the times when you have a big investment portfolio, like I did multiple times actually, sometimes you need to cash some of that out. Sometimes you need to cash all of it out for reasons that are not really relating to your portfolio or anything. So for example, like I've told you guys, like 5 years ago, 6 years ago or so, something like that, I got sick and went through kidney failure, and I couldn't work anymore. And even though all my medical bills were pretty much paid for by the Canadian government, we get the free healthcare system, so that saved me hundreds of thousands of dollars, but I still needed to pay for my everyday costs. And a lot of the drugs that we get for being sick in Canada, they're not free either. And so at that time, like 5 or 6 years ago, I needed to dip into my investment portfolio in order to pay those more vital things to use the money for. Now, there are a few other things you could do if that scenario were to come up, so you don't need to touch your investment. Like you could potentially ask, family for money. You could potentially put stuff on credit cards. That gets a little bit dicey, and that's on a, person by person basis. But I would say that unless you really trust your parents with giving you a loan or something like that, then don't put any emergency expenses on your credit cards or anything like that. Try not to. So again, I needed the money for when my health took a turn, but maybe for you, it's some emergency expense. Maybe your car gets obliterated or something. Maybe your car gets severely damaged and you need something to get to work. Maybe yourself or, your kid or something like that has some injury or an illness, or some family member has an illness and you want to help them. That's more important than your investment portfolio. So this number on the list is one of those things where sometimes you got to take a step back from the money and the investment. You got to think about what's most important to you in your life. Now, saying that, if one of your brothers or one of your uncles comes up and say, hey, I need the money for this, that, or the other thing, and they're kind of like a sketchy person, maybe don't help them out. And that's probably not worth dipping into your investment portfolio to help out a sketchy uncle. So again, this is all on a person-by-person basis, and whatever feels right for you, but just know that it is okay to dip into your investment portfolio if you really need the money for an emergency. So moving on to the next number on the list of when to sell an investment is, well, you might find a better opportunity. So let's just take a real estate example, because we've been sticking a little bit to stocks for this one. Let's take a real estate example. Let's say you have an investment property at $300,000 and it has a cap rate of 6% and it's doing pretty good. It's doing okay. So what I say, 300,000, 6%. And let's say you find another property that's $400,000 and it has a cap rate of something really crazy, like let's say at 9% or 10%, but you gotta buy it in the next 30 days. Now, first of all, I would probably do some due diligence on that, 9 to 10% cap rate property, because usually when something has a cap rate that high, things are not always what they seem. But let's just say it passes the due diligence and you want to invest in that property. It might be worthwhile to try to either leverage your property to buy another property, to buy that additional one, or it might be worth it to sell your property to buy that one, because this new property is likely going to get you a better return based on what you have researched. And so this applies for real estate, this applies for stocks, this applies for investing in startups, even though if you invest in a startup or like a company that's not public, it can be really tough to take your money out. So this is kind of a weird scenario. But let's just say, you have $10,000 invested in, some startup down the street, and then then all of a sudden someone comes to you and has this even better idea, and they want you to invest $10,000, but you don't have $10,000. Well, again, if you were able to take your money out of that other startup, which usually you can't, you could put it into this other one because it's a better opportunity. That's just a very generic example, and this applies to whatever. Stocks, maybe you see a better opportunity in some other stock versus one that you're currently invested in. Boom, sell, trade, whatever you want to do. That's an okay scenario to actually sell your current investment. That is to find another better opportunity. All right, so moving on to number 4, which is one of my favorites, and that is something that is kind of tough, especially if you're a beginner investor. It's tough to kind of tell if this is a good time to sell or not, because a lot of you just don't have the experience, but that is if you think the investment is a bubble, or if the investment field is in a bubble. So we saw this in the 90s with the tech sector, that was the .com bubble, where, the vast majority of tech companies were way overvalued and pretty much all of them went bankrupt or just went bust, whatever, shut down within a year, 2 years, 3 years after the bubble burst. Only a few survived, and that was like Amazon, eBay, and a handful of other ones. We've also seen a couple other bubbles in my lifetime, like the real estate bubble that popped in 2007 and 2008. Go watch the movie The Big Short or, the Inside Job. Those are both really great movies that deal with the real estate bubble that occurred, that played a large part in the recession that happened from 2008 to 2009. But the most recent kind of half bubble that I could think of was Bitcoin. And I remember going over my videos. If you can go back to my videos actually in like 2016, 2017, when I was making those stock investment videos every single day. And I would talk about Bitcoin as to, I don't know why it was increasing so much, because the application for Bitcoin was not growing anywhere near as much as the value of Bitcoin. And the price of a product starts skyrocketing and you don't really know why. That's a pretty good sign that there is some sort of bubble being created in this investment field. And so if you think that your investment, whatever it may be, it could be in real estate, it could be in some sort of stock, whatever it is, if you think it is in a bubble, and you've done your research, and you are probably not a beginner, you're probably at least intermediate or an expert level investor. But if you think your investment is in a bubble, then try to sell it as fast as possible. And so why would I say to sell during a bubble? Well, again, if you're in a bubble sector, most companies or investments never really recover in a reasonable amount of time, even if they survive that bubble bursting. So again, going back to the 90s, really only a handful, 5 to 10 companies survived that bubble, and 100 or 200 went bankrupt. Giant real estate investors that owned 10, 20, 50, 100, even $1 billion worth of property, they ended up going bankrupt as well during 2006, 2007. And of course, we all know a ton of people who lost a bunch of money on Bitcoin when they bought at whatever 18, 19, 20,000, whatever it hit. And then over the next few weeks, it goes down to like 6,000. So if you think your investment is in a bubble, then it might be a good idea to sell. However, sometimes, even after a bubble bursts, you might hold on to your stock or your investment and it might turn into Amazon, or it might turn into a real estate property that eventually skyrockets over time. So again, I'm not saying to always sell during a bubble, but I'm saying that it is an option. It is an option for you to sell if you think that your investment is in a bubble. Number 5 on the list is if the industry is changing. So this really applies more to the stock market and a little bit to real estate. So let's dive into a little bit of real estate here. So winding the clock back about 40 years or so, one of the most valuable pieces of real estate that you could buy, let's just say in Toronto, because that's what I did for a while, was commercial real estate in like a city or the suburbs. Especially if you had a tenant like Sears or Toys R Us, these giant companies that were leasing these giant pieces of real estate from you, you would make tons of money every single year from these big companies. And it felt really safe because these companies were healthy, they were generating lots of profits, and they always paid you on time. But as you know, the industry changed about 10 to 20, 25 years ago when the internet started to really take off. All of a sudden, the value of a commercial real estate property started going down and down and down and down because, well, retail just became less valuable. Amazon, eBay, and all those other e-commerce companies just kind of took over. Now you get stuff delivered to your door versus you having to go out and actually buy it at the Sears or the Toys R Us and so on. You know, when I was doing real estate in Toronto, this was 2012 or so, 2013, somewhere around there. The brokerage that I was working for was very heavy into the commercial space. And I used to have these long conversations with the broker of record there about how much commercial rents have decreased over the last 20 years that he's been doing this in Toronto. And in some cases, the exact same properties that he has been renting out for the last 20 years have decreased in rent by between 20, 30, even 40, 50% in some cases. And so that is one way of saying how the industry has changed. All of a sudden, the people who own those commercial real estate investments, they're returning less and less and less money every single year. In a lot of cases, they can't even get a tenant, so they're actually losing money. So because the industry has changed, it's a decent idea to actually get out of that industry. So sell your investment off if you can, and then move on to something else. The number 6 thing on the list of when to sell your investment is, let's say you're invested in a stock. Well, one scenario might be that maybe you are invested in a company who wants to change their direction and you don't agree with it, or a company that hasn't changed their direction and you don't agree with it. So let me give you an example. Let's take the best example of, recent times, at least from when I was growing up, Blockbuster. So Blockbuster did not adapt to the internet on time. They had the capability of being Netflix in a sense, or even buying them out. I think that they had the opportunity to buy them out, if I'm not mistaken, but they did not. And they gave Netflix essentially like a 5-year head start on a streaming service. And eventually everyone just hopped onto this online streaming. They hopped onto YouTube, Netflix, Vimeo, all those, they had Google videos back in the day and like Daily Motion and all those. And guess what happened to Blockbuster? They didn't adapt on time. So they went bust, and whoever was invested in their company got $0 in return. A lot of Blockbuster investors took millions of dollars of losses. And now let's take the opposite example about a company that wanted to change like too much. Well, the one that comes to the top of my head, and this company ended up being fine, but I'll just give you the example here, is like Coca-Cola. Remember when they tried to do New Coke? I mean, think about this. You've made the same product that people have loved, and you've continued to grow this company over the course of I guess it was 100 years at that point. And all of a sudden you're like, hey, let's just change our core product that people love. And really the only reason why people buy the drink is because they love the core product. And you know what? We are just going to try out this New Coke, and we're going to put in not all of our eggs into one basket, but we're going to put a lot of our eggs into this basket. And guess what happens? Well, People didn't like the product as much as the old drink. Now, that was a mistake that ended up costing Coke like $1 billion plus at the time, but it wasn't enough to actually sink the company. However, maybe you are invested in a stock that has done something similar or wants to do something similar. Not all of those companies can be Coca-Cola and take a giant hit like that and still be fine. A lot of companies that want to change direction and try it end up going bust. So for example, I'm invested in a few stocks today. Let's just say I'm invested in a bank stock right now, a Canadian bank stock. And I view that as a fairly safe investment that I'm going to hold on to for quite a long time. However, if they were to come out one day and just say, hey, we're going to launch a TV news station, or like we're going to become like a network TV, whatever company, I'm like, okay, I'm out. I'd cash out immediately if they announced that. Especially if they were just like, hey, you know what? We're going to step away from this whole banking thing that, has allowed us to become like $100 billion company. We're going to start like this. We're going to sell all of our assets and go into this like kind of media thing. Then again, I'd be out. Now saying that would never happen, especially for a bank, because banks do not want to change at all. But that would be an example of something, if it were to happen to one of my investments, I would immediately cash out. And it's not because I don't think the media company would succeed. I'm just saying that is not what I invested my money for. I did not want to invest in a media company. I wanted to invest in a bank. So the last point I want to talk about here as to when to sell an investment is actually something that is a little bit of a gray area for me especially. However, this could be a major positive. It could also be a major negative depending on how you interpret it. But I just want to say, I wrote it down here as actually, you want to retire and you want to party. So the reason I say this is because I do know some people personally that have had, their grandparents, whoever have, $500,000, $1 million, multiple millions of dollars, couple $1 million in their investment portfolios. And they have been very frugal their entire lives, almost to the point where it's been a negative and increased their unhappiness over time. And, they'll get into their 60s, their 70s, even their 80s, and they won't touch that nest egg. They just want that investment portfolio to keep piling and piling up, even though it might be millions of dollars in some cases. And that's one of those scenarios where once you get to a certain age, and again, it's different on a person by person basis, where if you have like $1 million in your portfolio and you're 80 years old and you want to take out half of it, or maybe you're 85, you want to take out $200,000 and go party around the world for the next 2 years and live your life, then just go for it, because life is pretty short. Now, saying that, if you're a 22-year-old and you want to go party and cash out on your $10,000, don't do that. That is stupid. I'm saying that if you have millions of dollars or 500,000, whatever, and you're at the point where you want to retire and just go party on your savings, let's say you've made a bunch of money, that's another scenario where you can sell your investments. Is that when or maybe, another good scenario too is, again, hopefully it's not for any of you listening to this, because it would be very sad. But again, if you're sick or something like that, or maybe, someone close to you is sick and they don't have a lot of time left, you could see that it would be more valuable to cash out some of your investment if it meant that you could go live life while you can, or with this person that you care about, and spend some really great, meaningful time together while you can. So again, that's another scenario that you got to think about. So there's a lot of life scenarios that I don't think people talk about too much, because I hear from a lot of people either, you got to keep your money in, just permanently, which, I do agree, try to do that. But there are tons of scenarios where you can take it out. And then you hear the other people, the day traders, the gold standard, as I like to call it, of investors, who say you should be trading all the time to make money. And if you could make 5% here, 10% there, double your money every week or whatever it is, that's insane. Double your money every month, whatever it is, pay for all your living expenses. And that's what you should do. And I would say my general overall thing here is that try your best to hold on to your investments as long as you can. Reinvest when you can. If you see a better opportunity, or maybe that your investment's going downhill for some reason, then it's worth thinking about selling. And if none of those are true, but maybe something in life has changed where you have to sell, or you think you should sell to get more out of life, then that is also worth selling your investment for. That's a good time to sell. So I should also mention that there's probably, a few other times to sell that I missed here for sure, but these are my general rules that I think about when selling a stock. This is kind of the guide that I go through when I think about if I should sell or not. So it's good general advice, but again, take this all with a grain of salt. Every person's different. Maybe you are a day trader, or maybe you are a buy and hold forever kind of person. It's all, just depending on who you are. So if you want to know more about how to invest, or even, if you're a super beginner, you want to learn how to set up your account to make your first trade, or maybe you want to learn some higher level stuff, I do have a course down below with my stock market course. I think it's $37 right now, I believe. And I think you get actually a bonus course in there too for a limited time. So please check that out. And I also have tons of other videos on my channel about the stock market. So just go onto my stock market playlist. There's like 200 videos on there, and you can pick which one you like. I think 100 to 200 videos. So that's going to wrap this video up. Thank you very much for watching. Please click another video of mine in the link down below if you want to learn more about how to invest in the stock market and some of my general investing advice. You can also click on my real estate playlist too. That's good too. And that's going to wrap this video. Please subscribe and like this video. Please subscribe to this channel and like this video. And I'll see you guys, in the next video that you click on.